All right. It's a great day in South Florida. My name is Chris Igoe, and today we're going to get right after it because fear and uncertainty is destroying the housing market. And I'd also make the argument it's destroying other markets too, but today we're going to do a deep dive and explore exactly what that is. Because in my experience, being in a place of fear and uncertainty typically lends itself to horrible decisions or a horrible decision-making process. And so while it is very important to address the elephants that are in the room and identify the issues that are in play, it's completely irresponsible to be paralyzed by those fears, by that uncertainty, and bury your head in the sand, hoping for a miracle, but not taking action around whatever it is you need to in order to find the right solution. And so I'm going to start this video sharing a story that happened this week where I received a phone call from a mortgage professional that I'm friends with. And truthfully, I've been friends with him for years. We've done tons of business over the years together. But when I spoke to him, I could tell that he was very concerned. And I'd maybe even argue that he was a little bit panicked. But he was calling me to ask me some questions about the stock market, about his 401k or his IRA or retirement accounts or whatever it was. But full disclosure, he was absolutely 100% terrified because he just looked at his account. Now, I will say I do not believe he's alone. There are lots of people out there that are looking at their stock accounts and are absolutely experiencing sticker shock because their investment accounts have been cut in half or worse. Now, full disclosure, I am not a stockbroker. I am not a financial advisor, and I'm certainly not offering any type of investment advice because I'm not licensed to do any of that. But in my previous career as a stockbroker, I gave lots of advice and lots of consultation and lots of due diligence around these same types of things. So we did do a deep dive conversation about what's happening and what he can do to position himself potentially better. But honestly, the first thing I had to do was talk him off the ledge. And I find myself having to have similar conversations with people all the time that need to be talked off the ledge or off the cliff, or however you want to describe it. But there's a lot of people out there that are totally terrified, paralyzed by fear, and considering making horrible decisions based on this fear and uncertainty. So while we're not starting with the housing market right now, we're going to get there because, as you might imagine, there are a lot of people out there that have a ton of fear and uncertainty about what they should do next, given all of the things that are happening right now in the housing market. But back to my friend. And I'm going to put on some sunglasses because it is incredibly sunny out and I want to be able to see the road. So he shares with me that his stock account, his stock portfolio has been cut in half. And he shares with me that he's about to call his investment advisor and pull out of the market completely and stop the pain, stop the bleeding, stop the suffering, and preserve his cash. And I can promise you, this is not the first time that I've dealt with somebody who thought that that was a good decision. And to be clear, everyone has different needs, and everyone has different timelines, and everyone has different economic pain points that they may be suffering in their life. So this is definitely not a one-size-fits-all solution, but I know my friend well enough to understand some of the things that are going on in his life. So in spite of the fact none of this was investment advice, and I made that very clear, but I was able to ask him some questions to help him get clarity to be able to make a better decision. Now, full disclosure, and I think these numbers are somewhat similar to his, but if you invested $1 million and it was up to $2 million and you felt wealthy and confident and rich and on the right track financially, and then you look at your statement and realize that your $2 million account is now worth $600,000, it is highly likely that you are going to be terrified and afraid and panicked and sick to your stomach. And you probably feel a lot less wealthy. I understand that. And while this particular story and the numbers that I'm using to illustrate the point might not be the same as yours, I think you can substitute in your own numbers and relate to exactly what I'm saying. Nobody likes to lose money, period. No one likes to see their accounts depreciate in value. No one wants their stock account to go any direction other than up. And I don't think I'm going out on too much of a limb here to say that that same logic applies to any other thing that you've purchased, any other asset. No Bitcoin owner wants to see their Bitcoin value cut in half. No homeowner wants to see their equity cut in half. There's nobody out there who wants to take a loss in anything, unless, of course, maybe you're shorting a stock. But now back to my friend. The first thing I had to ask my friend, even though I already knew the answer, is what type of account is this? And what he shared, it was a retirement account. And that retirement account has significant penalties and taxes that will be instantly realized if he was to sell and pull his money out of the account to get liquid and sit in cash. He would take an enormous hit. And moreover, he would realize enormous losses, which might in the moment feel like a win and alleviate some of the panic that he's feeling. But I could absolutely guarantee you that a few weeks from now, or a few days or a few hours or however long, when he realizes the enormity of the loss he just incurred, he would feel much worse than whatever he's feeling right now. Because those losses are now realized and the tax consequences are now real. So as we worked through a series of questions, he started to realize that, wait a second, I'm just scared and I'm probably about to make a bad decision, which is 100% correct. And then from there, I asked him specifically, what are the investments that you are invested in? And very quickly, he proceeded to tell me that he has invested in some of the best companies that are out there. Now, it is factually true. If you are invested in a company that's about to go bankrupt, or you're invested in some incredibly speculative, high-risk company, well, if that was true, then you may want to cut the pinky to save the arm. But none of those types of investments are suitable for the account that he has. And so I know he is in best of breed companies that are just getting beat up because that's what's happening in the market right now. But rather than be panicked and terrified and afraid and about to pull himself out of the game where he cannot recover any of those losses, I got to share the great news that congratulations, you are now in a position to take advantage of market weakness in these best of breed companies that you've been building a position in for decades or however long it's been. And you can buy those best of breed companies at a discount to where you own them. And you can add to your position and bring your cost average down because he's in best of breed stocks. And so rather than looking at this from a panic perspective of Chicken Little and, oh my gosh, the sky's falling, you're actually in a great position because you have a disciplined strategy to continue to purchase best of breed companies between now and whenever it is that you intend to retire. Because let's not forget, you were never pulling out of this account anyway. You never intended to sell at any point early anyway. This is a retirement account that you're going to hold on to for a very long time, at least another 20 plus years. But he has an incredible opportunity to continue to build his position, to take advantage of market weakness, bring his cost average down, and over time, as the market does what it does, he will be sitting on a fortune. But if he panicked and sold everything and moved to cash and buried his head in the sand, well, then you're done. It's game over. Because you've got to be in the game to win. And so while it's absolutely prudent that on a regular basis that you review your portfolio to ensure that you're in the best of breed companies that you should be in, it would be insane to take losses right now because you're scared. Right now, there is tremendous fear and uncertainty in the market. And there are lots of folks out there who call me on a regular basis who are terrified about what they should do. Now, to be clear, this is not a sales pitch. I'm not trying to talk anybody into or out of doing anything. Because truthfully, until I get to know what someone's financial situation is and what they are looking to do as far as buying or selling, I don't have a clue what's right for you. But there is so much misinformation out there as to what's happening right now that I wanted to take a second to drill deep as to what's happening right now and what's likely to happen in the future. And one of the best ways for me to illustrate that is by sharing a conversation that I had with someone recently who found me on YouTube, gave me a call. They want me to help find their dream home, their dream lifestyle, and they want a deal. And so does everybody else. Who doesn't want a deal? But after a brief conversation as to what it is they're looking for, I realized that their perception is so far off what the reality is right now that I had to bring them up to speed as to the truth about what's happening in my housing market. Because what they're looking for does not exist right now in today's market. What they want is something close to the beach, preferably with intercoastal access. on close to an acre so that they can max out South Florida living to the fullest. But they want it for 600 grand. Now we're in a rainstorm, which I guess is fitting because we are entering into a financial and economic storm as we speak too. Now, to be totally clear, these are really nice people. We had a great conversation, and there's no doubt that I can help them find what they want. But they've watched so much content and read so much information and have their heads filled with so much junk that they believe to be true, that they actually think that they can get an acre of land and an updated home with intercoastal access for 600 grand. I got news for you. Never gonna happen. They might as well start shopping for a unicorn because they're not gonna find one of those either. Which of course they could stable on their acre of land in this waterfront access home, which also doesn't exist. Now, to be abundantly clear and fully transparent, there will certainly be a time in the future where the economic pain of recession becomes sufficient enough to force distressed sales. And when homeowners are forced with the economic reality of putting their life back together again, given the shifting dynamics of whatever the recession and job market and inflation look like, I suspect that at some point in the future, there are going to be people that have to make those hard choices. And just like in the last financial crisis, there will be forced and distressed sales. But as of right now, they are few and far between. And I'd even go as far as saying they're non-existent in my market. And look, there's no way to sugarcoat the situation that we're in right now as it relates to the bond market, the mortgage market, or the housing market. We've got rates that have gone through the roof at an unprecedented pace. And it's also factually true that the faster and further interest rates rise, the less affordable homes become. And so there is absolutely a tipping point that exists. But for now, the Fed believes that unemployment is low and inflation is high. And the market is looking for any indication that the Fed might start to soften its policy, which hasn't exactly happened yet. However, the Fed's Mary Daly did say some things here recently that the market did want to hear. Now, I'm just reading this, so I know I get it right. But she goes on to say that we want to avoid an unforced downturn by over-tightening. And if we wait to see lagging variables like unemployment and inflation return to a steady state, we could easily over-tighten. She goes on to say that we're starting to see the economy slowing. And we're now in a stage where we need to be thoughtful. And more importantly, a slowing pace of rate hikes should be considered at this point. Well, yeah, it should be considered. But don't take this to mean that that's what's going to happen. But at least it indicates that some people at the Fed are starting to think the right way. Now, I've talked a lot in the past about the pain of recession causing forced sales. And what's interesting is that ATTOM, which is a leading curator of real estate data nationwide for land and property data, and again, I'm just reading this, released its Q3 data. And in their foreclosure market report, which shows there were a total of 92,634 U.S. properties with foreclosure filings, meaning default notices, scheduled auctions, or bank repossessions, were up 3% from the previous quarter and up 104% from the year previous. And then it goes on to say that foreclosure starts, while rising since the end of the government's foreclosure moratorium, still lag behind pre-pandemic levels. And that foreclosure activity is reflecting other aspects of the economy, such as unemployment rates, which continue to be historically low, and mortgage delinquency rates that are lower than they were before the COVID-19 outbreak. In fact, very few of the properties that are in the foreclosure process have reverted to the lender at the end of the foreclosure. And they go on to say they believe this may be an indication that borrowers are leveraging their equity and selling their homes rather than risking the loss of their equity in a foreclosure auction. Which is exactly right. If you've got equity in your home, you sell it. You don't auction it off in foreclosure. Unless, of course, you've buried your head in the sand and you don't know where you're at financially and you don't take action, which allows you to sell and keep that equity. Because the truth is, if all of these things happen at once and the market really does crash, you got no equity. Now, in spite of all the housing market content that is out there and all of the content that I've done about what a crash might look like, the truth is none of that is happening right now. And while, yes, it is obvious that certain market dynamics have absolutely changed, The idea that the housing market is crashing is complete nonsense. But make no mistake, the market's changing. Everybody knows that interest rates have gone through the roof. So it comes as no surprise to me that cash sales have increased 80%. And it also is no surprise to me that there are a whole lot of overpriced listings in the market that are not going to get 100% of list price. And that's exactly what the numbers indicate. 96.4% of original list price is what was received last month. And time to contract increased 75%. And month supply of inventory exploded 400% to 2.5 months, which is still a seller's market. But here's the metric that I think you'll find to be most important. And to be clear, the numbers that I'm sharing are hyper-local and they reflect my zip code, meaning the area where I live. Average sales price dropped almost 3%, from $911,000 to $886,000. And to be clear, these numbers are September 2022 versus 2021. But the market is absolutely changing. Now, I hope you found this content valuable, and if you did, please give it a thumbs up, subscribe to the channel, share it with a friend, and check out my next video, which I suspect you will love a lot. Until next time, peace.